Happy New Year. This is your mortgage bestie, Reese, and you're listening to The Encouragers, episode 38.
I always see those commercials for Navy Credit Federal Union all over. What's his name? Gronk. He's all over. Do you really
Yeah,
have to? Do you really have to be military? You can only be a military personnel or retired or someone from the military. Is that true? You can only.
no, that's
Oh,
kind of why they amped up the commercials lately. That's why everybody's like, dang, I heard you guys on the radio. I heard you guys on the Super Bowl commercials.
yeah.
Because they're trying to get the message across that you don't have to be military only. So you can be military family, you can be a DoD government employee or their family. And then once somebody joins Navy Federal, their
Mhm.
family members can join too. So I've met like so many people that have literally zero affiliation with the military, and
Mm.
that's cool with us. But there's like a billion and one ways in, and I always try, like every time I sit down with somebody, I try to find them a way in if they don't know how. And I think there's only been like one or two people in my whole life that I really was like, okay, I don't think you can join. But most people, they have some type of way they could get in.
Oh, nice. Very, very nice. Yeah, I know that like some banks, like when I lived down in Vegas, I lived all over the place. I lived in Vegas and I know like they had a bank specifically for all the gaming people, gaming. I think it was called Westar Credit Union, but it's like you have to work for a casino or some entertainment to be able to get into that. So when I heard about Navy Credit Federal Union, I thought it was kind of like the same. But that's all. That's interesting. It's cool. What's up, Jake?
What's up?
Can
What's
you hear
up?
us? Can you hear us okay?
Yeah. Yeah, you guys
Oh,
sound
okay.
great. Can you hear
Oh,
me
okay.
okay?
Yeah, yeah.
Hey.
Sounds good.
Mhm.
Just
Hello,
made it in
hello.
time. You made it in time for the sound check, so you're good, man. Good. But yeah, we were just kind of just vamping right now, just talking a little bit, and just I have so many questions I want to ask. So I reach out, I go around, I reach out to people and see just basically what I want to learn and know more about. So thank you, Reese, for did I say your name right? Reese Laufasa?
Yep. Mhm.
Oh, okay. Cool. And that's Jake. Jake is in North Carolina and I'm in Reno. And basically we can go ahead and get started right now. Tonga's gonna be jumping on here in a minute. He's getting his camera and stuff set up. But we can go ahead and get started and just go. This is the first podcast of the year. So this is pretty cool.
Ooh, I'm excited.
Yeah, thank
Just
you so
kind of
much.
just kind of to start it off, I
Yeah.
saw a very impressive picture of you doing some exercises on the internet. Is that something you do every day or try to do every day?
I try. I try my best. But I don't always make it. Not every day. I'm trying to get, of course, it's the new year. Like everybody has their new year resolution and it's always fitness, right? Um, I'm trying to do at least daily, like even if it's only 10 minutes or so, I'm trying to make it to lift like every day. Cause I feel like that's when I work my best and I'm really trying to have like a great year because the market's wild. So you have to like hype yourself up in this market if you want to survive.
All right, attitude is everything, right?
Hmm.
That's what's up.
So talk about that. We talk about fitness a lot. It's particularly of huge interest to me because I've been lifting weights over the years. It was really kind of a hobby and a passion of mine. I kind of took more the strength aspect. I was always trying to get stronger. That was kind of so I wasn't really much into like the bodybuilding aspect, although that's the side effect. You're going to get bigger if you lift heavy, right? But I enjoyed it so much. It's becoming tougher and tougher to recover as I get older, which is like one of the downsides, but I still love it. So what's kind of your specialty? What do you like doing?
Man, it changes so much with me because I grew up playing volleyball and my dad was like a Disney Channel dad. And so all of my siblings, I have three older brothers, every single one of us, he was like, you guys are going to college for sports. Like that's what you're doing. And so every single one of us was in the gym, like training every day. But when you're an athlete, like you train for your sport. And so when I finally stopped playing volleyball, then I was like, what do I do now? Like I played volleyball like all these years and like I don't know what to train for anymore. Like, I don't even know what I'm doing in the gym anymore. So I tried like cycling, yoga, um, powerlifting. I even had like a bodybuilding phase that I went through. And then finally I tried Olympic lifting last year, and I had done a lot of Olympic lifting growing up playing volleyball because it helps with like that strength training aspect, but I never did it to the extent where like my trainer was working on like how I grip the bar and so detailed and like how I'm doing those lifts. And so I really got into that was like 2 years ago. And that's probably my favorite type of workout right now. But I still do like all those other ones. Every time I get a little bit bored in the gym, then I'll go like do a cycling class, or I did like hot yoga last week. It just depends on how I'm feeling that day. I don't really have like a set routine.
Olympic lifting, is that like the clean and jerk? Like
Mhm.
the you pull it up to your chin and then you have to pop it up real quick. That type of lifting?
Yeah, yeah, like
Oh,
clean and jerk,
okay.
snatches, all that. It's that type of stuff.
Super technical. Yeah, those are hard to do with good technique, at least for
Yeah,
me.
mine's
That's
are
what's
so
up.
heavy
Shoot.
still. I'm definitely not like the technique person, but I try my best. I try my best.
If you watch me do some of them, especially now, it's like you're gonna want to look away because I just try and muscle it up at this point. Like if I could go back and redo my like after college my fitness journey again, I would focus. I just kind of focused on strength mostly, like I think a lot of guys, but I would focus on flexibility,
Mhm.
just as much mobility, just as much um just the longevity aspect of recovery. Like those are the things I missed, and so I'm trying to play catch up on some of those things now. But yeah, if I could go back and do it again, I would have incorporated a lot of those. I would have loved to actually get real technical with those Olympic lifts, but they were always super hard for me to do. Main reason is my shoulders don't, without going into too much detail, I have a hard time like throwing stuff over my head like that. Like my shoulders don't like, I don't have good range of motion. And
Mhm.
so that was always my big struggle was like, with the technique there, I was just muscling it all up and like hurt my shoulders and stuff like that. So maybe it wasn't meant to be, or I needed to focus, like I mentioned, on some of those things like mobility and flexibility first before I could have gone into those. So those was always fun to do, but a big challenge for me.
Yeah.
Oh yeah.
Well, it's different nowadays because back then, when we were going to college, they were just trying to get us, like the athletes, when we played ball and stuff, bigger, faster, stronger. You know what I mean? They're just trying to get us to compete at a high level really quick. But nowadays, man, I see these like high school kids, they take like yoga classes during like part of their curriculum is to take yoga and stretching and meditation classes. I'm like, yo, I wish we had this when we were going to school. You know what I mean? Like you see all these kids now, wrestling kids, they're doing meditation, do more flexing. I mean not flexing, but more what is it? See, that's how much I don't even do it.
Like,
Stretching.
yeah, like yoga and activations and
Yeah.
loaded stretching, which is kind of like a big thing for improving your flexibility. There's so much like new like knowledge is
Knowledge.
easier to find now.
Right. Right.
And yeah, I wish I had more of it when I was younger. That's for sure.
That's
Oh
what's
yeah.
up. Yeah. So man, yeah, and not the knowledge tip. We're here. We're talking with Reese Laufasa. She's a professional mortgage lender in out of Phoenix, Arizona. And welcome to the podcast. I know we just ramble here and just talk. So, but we'd love to give you a chance. So yeah, just feel free to butt in anytime that we're talking. But Reese, can you go ahead and just give just a little introduction of yourself or what you want our listeners to know who you are and what you do?
Yeah. So I have been in the industry for about 5 years. I started just working part time for Navy Federal Credit Union. I was like, I found myself living in Korea and I was just looking for a job. I was like, I just want to do something while I'm here. And I found Navy Federal and I had already had them for credit union. So I was like maybe I'll work there part time, that'll be cool. So I got a little part time job there. And then I realized like how amazing they were as a company to work for. And every like step that I took with them, it was like man, they just taught me so much. And so they have something, you can become an MLO inside of the branch and you can start taking mortgage applications. So I started doing that when I was in the branch and I loved it and I wanted to know more. So I decided I wanted to be the actual loan officer and take it a little step further. So the loan officers are the ones that get the applications and then they'll actually take a buyer all the way from start to finish when they buy a home. So I did that for 2 years and I closed over 200 loans in my first 2 years, which is like a crazy.
Wow.
Yeah, it was a wild 2 years and it was during COVID. So it was when the rates were super low and I just jumped in at like a super high volume time. But I was able to keep up and most of my surveys were perfect. So I really learned to like care about people and I found this love for like educating people because when they come to you with a mortgage application, sometimes you can get a super qualified person that's like, you're looking at their application, you're like, why haven't you bought a house? Like, that's crazy. And their answer is always like, well, nobody really told me. Like, I didn't even know. And so that part of the job, I was like, man, I need to like find some way to let all these people know that they can buy houses and make sure like people know how to buy houses. So this new job came out, business development officer, and you still got to work with the mortgage teams, but that's really what the aspect of the job is you're just an educator. So right now, I don't actually carry all of the loans. I still have an eyesight on any loan that I bring in, and there's still people that are on my team that I work with that are the loan officers on them. But my main job is to like educate people from the start, answer all their questions, and then stay there with them throughout their entire home buying process until they close. And then I work with all of our partners too, like realtors and builders that would help with the transaction. So technically I'm a mortgage lender, but really I like to say like I'm an educator and I really like to just help people learn about the whole process.
Man, that's dope. That's awesome. I don't think a lot of banks or a lot of different institutions have a particular person like that. That seems really personable to me, right?
Yeah, they don't. They don't. Most of the time, it's the loan officer that'll do the whole thing, which is great. I mean, sometimes the loan officers, they have the capacity to do it. But when you're closing, like my last year as a loan officer, I closed 155 loans. When you're closing 155 loans, it takes so much time. And I know because I worked a crazy amount of overtime that year, it takes so
Mm.
much time to do that part yourself. So it's nice to just be that person for the loan officers too, where they can just focus on like getting the loan done, getting their tasks done, making sure it closes. And then they have me to like educate and help them with that part.
Man, that's crazy. We actually we came across your social media and we found we there was a social media post that you put on. It was I think it was Instagram that you it was a popular reel sound effect, right? And then it was you slapping the screen, right? So you got immediately got our attention, just hitting the screen, and then I think the caption was you can buy a home for 0 to 5% down, something like that. Do you know? I could
Yeah.
share it here, but
Yeah. It was
mind
like,
blown.
it was like, stop thinking that you need a 20% down payment and you
Right,
can also 0 to 5% down.
right. That's my wife and I we're trying to buy purchase a home, and so this is the reason why I reached out to you because I want to know the process, learn a little bit more behind the process of purchasing a home. And recently, Jake here, he just closed on his home, on his condo out in North Carolina. So he's just recently bought his first purchase, so his first property. So I mean,
Mhm.
he gone through the process. You know what I mean? So
That's
kind of,
good.
you know what I'm saying? So I think that education, what you're sharing with everyone with your social media reels and all that is super important. And it can just uplift us and put us in different situations, right? Having correct information and applying it.
Mhm.
But
Right.
yeah,
From my
go ahead.
perspective, it was
Yeah.
complicated. Like, and a lot of it was super new to me. Um, and thankfully I had my house in order, so my credit was in a good place, and I was able to. But it was difficult to find the right information, and I feel like the loan officers assumed I would know more than I did and I researched too. Like I'm a researcher. That's what I like to do is figure out so I can understand. But even having done that, I was like, just if it was my 22-year-old self trying to do this, it would have been really, really hard to prepare for something like that. So, the value that you bring where you kind of ease that transition for people, just me having gone through it as like a much more grown adult than a 22-year-old version of myself, we appreciate seeing that and making it just more easily how you go from step to step, right? And how you prepare for it and then how you go through it.
So a
Yeah,
lot of people, go ahead, Reese. Sorry.
no, no worries. It's so tough, the whole process. Sometimes I actually love to like take a step back and talk to somebody who literally knows nothing, because then they'll remind me of all of the basic questions that you have to go through with every single person. And I think it's great that you do your own research. I think that that's super helpful in the process, but yeah, sometimes loan officers, they get so busy, they forget that not everybody has gone through this and it's not something that they do every day. So they forget to like go back to those basic questions. And then first time home buyers, especially, they don't even know what to ask. So then loan officers are like, oh yeah, do you have any questions? And it's like, well, yeah, I have a lot of questions, but I don't know what they are. And so the way that I like to do things is like, I'll say, well, you ask your questions first. And then after they ask their questions, then I'm like, okay, well, this is what you should know. And then I'll go through like an entire step by step of like things that I tell the same thing to every person.
That's awesome. And
Mhm.
then, like, how important is it to develop to find a good mortgage lender, like mortgage, person like yourself? How important is that
Oh
in the
my God.
home buying process? Yeah.
Yeah, that is a great question because it can make or break your entire deal.
Mm.
Not finding the right lender and then not finding the right realtor can break your entire deal. And that's because people talk in the industry. So a lot of us, we have heard of the person that's on your contract or the person that you want to work with. We've heard of them before. And sometimes that's a good thing. Sometimes that's a bad thing. And if you're not working with somebody that has been recommended by somebody, or you're not working with somebody that you found and you know that they've been working with you before you're just ready to submit an application, you might not get all the information that you need to feel like you're making a good purchase and to feel comfortable throughout the process. Like there's so many people that will go through the entire process scared because they just don't know what's going on. And if they had worked with the right lender from the very beginning, like for me personally, I spent an hour talking to somebody at like 5 p.m. yesterday that doesn't even know if she's ready to submit an application. And that's cool with me. I don't care if she ever submits an application. It's
Mm.
more about like I want her to know everything before she even says I'm ready, because if you start trying to learn about the process when you're ready to submit an application, it's so stressful. There's so many things that you have to intake. So it's best, like if you're not ready, it's best to start trying to research it right now and find a good lender that's willing to talk to you if you say like, well, I'm not ready. If you say I'm not ready and they're like, okay, well talk to me in 6 months, not the right lender,
Mm.
because they don't really care about giving you information. All they care about is getting your money and taking your application when you're ready to purchase.
Mm. So it
Mm-hmm.
helps to be a nice person when you're doing this type of work.
Mm-hmm.
I'm just thinking like if you're helping that one person out and they show how caring you are, like you show how caring you are, they're gonna want to like referrals are huge, right? Referrals are huge in any type of business. So that one person can lead you down to 10, 15 other people, probably. Well, I'm assuming, right?
Yeah, a lot of people, they build their business that way, like straight up off referrals,
Mhm.
and that's all that they have to do is just be a good person, and then the leads, they just come in for them.
Authenticity. So I've been in sales for over 20 years. I think authenticity is the single best trait that you can have, because if you think about how much like email campaigns and we're advertised to on our phone constantly, to the social media apps. So we're advertised to more than even 20 years ago, right? So you're constantly advertised to. So how do you stand out? In my opinion, being authentic, showing that you're kind, that you care. That is a rare trait in sales, but it to me it's the most it's an indicator of success if you have that trait. So I love that you said that.
Being personable.
Right.
I'm taking notes. We always take notes when we're doing our podcast, especially we're trying to learn from professional individuals like yourself, Reese. So being personal, I need to find a mortgage lender that is personable and doesn't just like feed me BS. So I'm gonna have to turn on my BS meter when I'm out there.
Oh yeah. And then you
No.
also find
Mm-hmm.
somebody that is super knowledgeable. So when I say that, I mean, don't find somebody that's like, well, I've been in the business for 20 years. Okay, that's great. Like some people, it's like 20 years can mean a lot, but sometimes 20 years doesn't mean squat. Like you can be in the business for 20 years and be closing less than somebody that's been in the business for a year with real estate specifically, because people jump into this and they just flourish sometimes like their first few years. And so it's also great to say like how many families have you helped buy a home? Like how many
I like
people
that.
have those loans with? Because
Yeah.
if they've helped one person in the past
Mm-hmm.
2 months, like come on,
Ain't cutting
you
it.
know, you have to
Get
wonder
out of
why.
here.
You have to wonder why. Yeah.
Mm-hmm.
So
Mm-hmm.
years in the business is not the best indicator of their knowledge, but the amount of deals that they've closed, the amount of families they close. And then you can also just ask them straight up, like, what can you offer me? Like, what makes you different? If they have to pause, not a great lender, not a great realtor.
Mm. Man, that's crazy.
So when you ask like what makes you different, what are some of the things we should be looking for there?
It's going to depend on the person. It depends on what you're looking for. So if you're looking for your first house, you've never bought a house before, you know nothing about the process, you might be looking for, hey,
What's
Hello.
up? What's up, Tonga?
Hey,
What's up,
Tonga.
guys?
Want to welcome everyone. Tonga from the Card House, Texas, over here on the podcast with us now. What's up, brother?
What's up, guys? Not a whole lot. Sorry to interrupt.
How
yeah,
you good? You're good, man. Your audio sounds good and your video sounds good, bro. You're good.
Okay.
All right.
so
But yeah,
if
go on, Reese.
Okay. If you're a first time home buyer, you might be looking for a lender that can walk you through the entire process, somebody that's patient, that's going to give you all the information that you need, go through all the different programs that you might be eligible for. And then for a realtor, you are also looking for that same thing with them. If you're like an investor, investors are going to be looking for something completely different. They're going to be looking for, a realtor that specializes in investors because they need to know, hey, if I'm looking at this house, like, is it going to make me money and how? And then for a lender, they're looking for lenders that offer specific products for investors and that have loans that are outside the box. Because if they're a full-time investor, they don't have a job. All they have is the income from their houses. So their tax returns and they don't have pay stubs. Everything in that sense will look different for their income. So they need a lender that knows how to work with that. So it kind of just depends on like what type of house you're looking for, and then how many times you've done the process, on what type of lender and realtor that you need to work with. Because, like for me personally, I specialize in first-time home buyers and VA loans. So those groups, I got you. Anything you need, I got you. But the investors, a lot of times, like I'll even refer investors to other lenders because it's not that I don't want to help you. I want you to get the best person that's going to give you the best financial advice. And I'm just not that person right now for investors because I don't have as many products as like my broker friends might have. So sometimes lenders even will refer out if we don't specialize in like a certain field.
Okay, that's good tip to know. What
Mhm.
are some things that I myself, me and my wife can do before, when we're in this process right now? We haven't started, but we're looking, saving up our chips, right? What what are some things we can do to prepare us to go into talk to someone like you, Reese, to get a loan for a home?
So I can personally set up like an appointment outside the podcast and go through like your personal situation so we can really dive into what that looks like for you. But just so you can still talk to a lender, even if you're not ready to buy, you don't want to pull your credit yet, you can still talk to someone to see like, hey, this is what I got going on. Can you let me know what I should be doing, or what red flags do you see? What am I doing right? But just in general, if somebody's looking to purchase a home, try to make sure that the way that you're paid doesn't change. And if you don't have a 2-year job history, just know that there's a chance that you might have to wait unless you were like in school before. And then just saving up as much as you possibly can. You can buy a home with 0 to 5% down for a primary residence if you're planning on living there. But if you can put down more, sometimes that's great. Or like if you can just have extra money in case there's repairs, just save as much as you can. And then check your credit if you haven't already. You typically want to be at least in like 640s or above for most lenders, just to be looking at the like getting qualified for most. And then if you have a credit score above that, that's great. You might be getting better rates that way. But if you haven't checked your credit, definitely check. There are so many different apps you can check your credit on. The best and most accurate one that I've found so far is the MyFICO app, because they actually give you a housing credit score. So they'll give you like all the different types of scores that lenders look at, and their housing scores. It's usually pretty accurate on there.
Mm.
So I would work on like those three main things if you're not ready to talk to a lender yet.
So, how much of the credit score and what part of the credit score? Because you just said something really super interesting, the FICO score. What's the difference between the FICO score and the credit score for our listeners to understand what that is, the difference?
So I'm not like a super credit expert, so I can't dive too
Right.
deep into the difference in like the names, but there's just different credit scores that you have that all types of lenders will look at. So if you're applying for an auto loan, that credit score is going to look way different than your mortgage credit score. And
Mm.
usually, like an auto lender or a credit card lender, they will only pull one score from one credit bureau. For mortgage lenders, they're pulling your whole life story for your credit. And so we pull all three credit bureaus, and then we usually use whatever the middle score is. And then we have your entire credit history ever.
Mm.
So we usually need to look at like the past 2 years for like missed payments, any delinquencies. But we have the whole picture. Like if you have a 20-year credit history, we see like the whole 20 years on there.
Okay, so like student loans and all this stuff, right?
Yeah. So it's really like super comprehensive with mortgage. And then a lot of people will find that their mortgage credit score is lower than what they see on like Credit Karma or
Hmm.
score on like Experian.com. And they'll be really surprised when they get their credit pulled for a mortgage app and they're like, what? I thought my credit score was 700. What do you mean it's 660? You know?
Mm-hmm. Jeez. Okay. All right. That's a great tip too. Great pro tip right there. So let's say a lot of people that I know are freelancers, even myself included. I have a normal 9 to 5 job, and then I freelance video work and photography work. How do we implement our freelancing income into the application of a mortgage, to apply for a mortgage loan? Is there a way to do that? Is there an easy process? Or is that pretty difficult to do?
Yeah, you can do it. I wouldn't say it's like the easiest thing in the world.
Mm-hmm.
It can be kind of difficult because most lenders are going to require that you have a 2-year history of it. 2-year meaning you have two full tax returns. So if you've been doing this for all of 2020, all of 2021, then actually, wow, 2022 just ended and we're about to file taxes for 2020. That's crazy. Okay, so when you go to file taxes for 2022, you did this all of 2022 and all of 2021, and your income from it was pretty steady. You might be able to use it on a mortgage application, but we're going to need your full tax returns and then typically a profit and loss statement and maybe your business bank statements to check if the income is steady. And then on your tax returns, we usually take the net income from self-employment. So if you're writing everything off, sometimes we can actually see that it shows a loss on your tax returns. And it's really sad because I've seen people that are even making like they're a millionaire and they have no money to show on their mortgage application because their CPA is too good at writing things off and they didn't pay any taxes on anything. So yeah, it's like, your CPA has to know that you want to buy a home. So if you do like freelance work, if you have 1099s, even Uber drivers, if you do Uber on the side, make sure when you file your taxes, you have a good CPA that knows you want to buy a house in 2 years so that they know like, oh, maybe I shouldn't write off every little thing. So you can't have your cake and eat it too. You got to pay taxes if you want to buy a house.
Okay, yeah, because no bank wants to loan you money if they don't show, if you're not showing any income coming in, right? I think.
Right.
Okay, makes sense. Dang, that's crazy.
I really did love like the myth that you posted on there. Now, are there other like well-known home buying myths that you can walk us through that is good for everybody to know?
Whew. There's so many. I would say the biggest ones that I've heard are probably the 20% down, everyone thinking you need 20% down to buy a home. Also, everybody thinking that if you don't put 20%, then you're going to have to pay PMI, which is private mortgage insurance. It's basically an extra, like usually a few $100s that you're going to have to pay per month as part of your mortgage payment until you have 20% equity in your home, and then you can request to have it canceled. Not every lender requires PMI. So Navy Federal Credit Union is one of them. So on that one video, I got so much heat because everyone's like, yeah, but if you don't put 20% down, then you have to pay PMI. And I had to respond to like every single comment. And I'm like, we don't require PMI here. We don't require PMI. So that's another big myth. You don't always have to pay PMI if you put less than 20% down. Another one is that if you get your credit pulled by multiple mortgage lenders, then your score is going to drop significantly every time that you go shopping. Yeah, for mortgage, you have a 45-day window where you can get your credit pulled, and you can get it pulled by like 20 different lenders in that time frame. And it looks like you only got it pulled once as far as your score dropping. So once you get that first one pulled, every other lender after that is going to see the same score as the first one. And so that a lot of people I've met, they're like, well, I only reached out to one lender because I didn't want my score to drop. You should definitely shop lenders. And then with that, everybody thinks like you should just go with the lender that has the lowest rate. You can negotiate mortgage rates. It's pretty cool because some people have rate match programs like us. We have an actual program in place where we're like, hey, we'll give you $1,000 if you can find somebody that has a better rate than us and we can't match it for you. And then some people, they get commissions based on the loans that they close. And so sometimes they'll give you like part of their commission to get you to close with them. So you can negotiate rates too. They're not always just like set in stone.
Wow, I never knew that.
Mm-hmm.
Did you know that, Jake? Did you negotiate? You tried negotiating your rates when you purchased your condo?
I tried to, and I had multiple lenders, but the one I was trying to negotiate with had the best rate to begin with out of the other ones that I did. So they offered me a good rate off the get-go. It was also a bad time because every other week the rate was going up. It seemed like. And so, because I bought in, so I bought in 2022 in June is when I closed. And so, if you remember at that time, it was skyrocketing a few points almost like every couple weeks. So I felt some urgency. And then I had some urgency because I had to find the place where I was renting abruptly. I couldn't rent there. I wasn't given much warning. And so I was in a little bit of a rush. So I tried. I was not successful. But at least the rate was good at I compared three lenders is how I did it. But I felt rushed too. Normally I would have liked to spend more time. My original lender that I wanted was, so my dad served in the military and my grandpa and grandma did, and my grandpa on the other side. So I was trying to go through USAA, but they don't lend for condos. So then I had to go and find other lenders because I have a lot of my banking through USAA already. So I find kind of the same thing with Navy Fed. I know they're probably your biggest nemesis, right? But the good thing about the both of them that I've found, I have less experience with Navy Fed, but the customer service that you get from the military backed lenders is just bar none. Nobody else competes. And walking you through processes, the lender, USAA, I didn't know I was going to get a condo right away because I was looking at houses. I made my real estate agent take me through like 30 something different places. So I was running him through the ringer. But so I didn't know it was going to be a condo. And so originally it was like USA. I was pre-approved, and everything started to go. It changed when. So apparently during COVID they stopped lending for condos. Mm-hmm. And so, apparently a way to mitigate some risk, in their portfolio of loans, because they didn't know what was going to happen through COVID. I think a lot of lenders were cautious at that point. So anyways, that was, so I had to jump through a lot of hoops, to get it done. But I basically started looking in April and closed in June. And so it was pretty fast, all while I was working my regular 9 to 5. I was trying to start a new little side hustle business at that time. And I have another job. I work on the weekends and house hunt. It was a pretty hectic time in my life, but yeah, I think I did pretty good for, I probably slept for like a month after I finally like got moved in and got everything in. But it was rushed, but I feel like I did well with the way that the cookie crumbled. I think I did well. So, but I'll be much more prepared next time, and from taking notes from all the advice you're giving.
Good. No, I'm just joking. USAA is actually a great company. We work together a lot. Like, sometimes they have insurance. We don't have insurance. So a lot of Navy Federal members, they have both. I have both. Don't tell anyone, but they're a good company. Yeah.
That leads me to my next question. I was kind of wondering, like, who should you go to? What bank should you go to? Should you go to a credit union, or like something like Bank of America? That's where I bank, with Bank of America. Like, what are the differences of going to whichever bank?
That's a great question. Because a lot of realtors would probably say, don't go to a bank at all. They hate big banks, and sometimes they even hate credit unions. But then they find out that we're local. So the reason that realtors and a lot of even other mortgage lenders will say, don't go to your bank, don't go to your credit union, is because a lot of them are famous for having terrible customer service. And you won't be able to talk to anybody. Like, they don't have direct phone numbers sometimes. And that is the case with a lot of big banks. So I would say Bank of America, like, I don't want to talk bad about them because I don't really know exactly how their mortgage process is. But before you even apply there, I would definitely ask, like, when you call in, or try to find somebody that knows a Bank of America loan officer that does have a great reputation, and say, like, hey, what's my process going to be like here? Am I going to get a cell phone number? Am I going to get somebody I can talk to directly? And am I going to be working with one person, or am I going to be working with whoever answers the phone that day? Because they call them local lenders. Local lenders will usually only be able to lend in like their state, and they usually only work in like a small area, like a few cities wide. Those local lenders, they have cell phones. They'll answer your phone call at like 9 p.m. and they'll go the extra mile for you. And they work with a lot of local realtors on a regular basis. So when you have that teamwork and your realtor knows your lender, a lot of times it just goes smoother because they're like, hey, I know what you need. You know what I need. Let's get it done. Whereas like the big bank, sometimes the realtors, they don't even know who to call. And if your realtor's trying to help you and don't even know how to get in touch with your lender, that's kind of what makes them upset. So I personally wouldn't even recommend going to a bank or a credit union unless you know somebody there, or unless they tell you on the phone when you are applying what your process is going to be like and that you're going to get a direct loan officer that you're going to be working with the whole time.
I didn't know that. I didn't
Yeah.
know that.
Bank of America was one of the three that I was comparing against, and a lot of things that you said ring true. Plus, their closing time was double what everybody else's were, and then I called in a couple of times with somebody different every time. So it was just more of a tough experience because my initial experience with the USIA was amazing. So why I rely on them so much. It was the same officer every time I called back in. So, there's just a lot of positivity. But once we found out it was the condo, then I had to pivot and find somebody else like real fast. Um, so, so that was the tough part. But yeah, but I didn't have a loan officer that I already knew. I do wish I had somebody like that but it's like, how do you find someone like that already? Unless you know somebody. But yeah, I like off my time living here, I didn't know a loan officer, right? So how would you recommend finding a good loan officer?
That's a great question. So I would take one, if you're working with a great realtor that you love, ask them for their recommendation. And then sometimes, like a bank or credit union, they won't be their preferred lender, but they will have worked with them with like another buyer that they worked with, or they were like the seller in another transaction. And they're like, whoa, this is like the best transaction I've ever had with Navy Federal, which in a lot of cases, like when I was doing loans, that's where a lot of my referrals came in from, because people are like, whoa, like I never knew anybody personally at Navy Federal. Can I just request you next time? And so realtors, anytime that they had a buyer that was like, oh, well, I was planning on applying with Navy Federal, then they would be like, oh, wait, I know Reese, like you should reach out to Reese. And so they didn't recommend me on every single loan, but if they knew that their buyer wanted to use Navy Federal, then they would. So I would say, like, if you want to use Bank of America, then you should ask your realtor, like, hey, did you have anybody at Bank of America that you ever had a great transaction with? And then you can also just search on like social media. I think that's how a lot of people find me. They're like, I didn't know you guys were on social media. And not all of us are, but I
The
just happen
smart
to
ones
be.
are. The smart
Yeah.
ones are.
Right.
That's
So,
awesome.
tell our listeners how they would find you, Reese.
You can find me on Instagram, buy don't lease with Reese, or you can put in my name, Reese Laufasa. And you can also, if they Google me, then they would find my LinkedIn. They would find my contact information on there. So I would try to Google loan officer, Bank of America, see if you can find somebody with
Damn.
reviews, if like that's who you're trying to go with.
Hmm.
But if you can't find anybody, then it might be a sign that
Hmm.
it might not be the person you want to go with.
Yeah. I ain't feeling Bank of America. I'm trying to make I keep reading all these different books, right? About like becoming your own bank. That's like one of my 300 goals, right? Become my own bank. And just I don't know. They're cool. Like the bank tellers that I go to, the bank clerks and stuff, they're super helpful. Been knowing them for years. But yeah, I don't know. Something about when they fail that one year kind of threw me off. But
Well, there's a secret that like, well, it's not really a secret. It's just a fact that a lot of people they don't know. You know the difference between a bank and a credit union?
I was gonna ask you that. No, I don't.
So credit unions, I didn't, and it's funny because I didn't even know before I started working for a credit union,
Hmm.
but credit unions are actually nonprofit. So the reason why credit unions have like a group that they usually serve, like teachers or military, government employees, things like that, is because credit unions are actually owned by the members that have accounts there. And so, like with Navy Federal, every single person that has accounts with us, they have to open up a membership share savings account and then they have to put $5 in. And it's a deposit hold that we keep unless you cancel your membership. And that's what makes you a member with us. So, if you're owned by the members and you're nonprofit, then credit unions are usually working to get their members the best deals because they technically own the credit union. And then since they're nonprofit, all the money that they make from like fees and rates and all that all the accounts, it goes back to making the credit union better and then back to members accounts. Literally, like we actually give dividends on the accounts and you get money back in your accounts when you're with a credit union.
You get
So
dividends? Is it
yeah.
quarterly?
So if I always tell everybody, like, if you're not going to use Navy Federal, like, definitely please use another credit union because
Mm.
there's a huge difference between a credit union and a bank.
How do you get into that dividends? You just be a member and they just, how does that apply? How do you cash in on it or apply for that? Or
Yeah, so the dividends are on every single account with us. Depending on which account it is, you're going to get like higher dividends. So with our checking account, that's usually like the lowest because people keep the lowest balances in there. And then you get a little bit higher with savings, and then you get a little bit higher with money market savings. And then there's like certificates of deposit, which is kind of like a lockdown savings account, and we can count on that money being in there for a certain amount of time. That's where you get like the major payouts as far as dividends go. But at Navy Federal, at least we have them on every single account just automatically.
It's almost
and
like owning stock in Navy Federal. Like if you were to look at it that way, where you're not necessarily. It's almost like, I guess, because of you're thinking long term, so almost like a
Mhm.
401k or a Roth IRA, but not really. You're just kind of holding longer. So interesting concept. I didn't know that about credit unions.
Yeah, people will be like, what's this like 3 cents or 4 cents that keeps going into my account every month? And you're like,
Mm.
it's free money for keeping it going. It's pretty
Yeah.
fun. You would find that out. And I was working in the credit union. I love when people ask that.
Dang, that's dope. I'm gonna
Mhm.
start moving. You know what? I don't get no kind of dividends from my big bank. I
Nope.
think I'm gonna because I we have a credit union bank at Mountain America Credit Union. I don't think there's any Navy Federal Credit Union out here in Reno. I'm gonna have to search that one. But
I
yeah,
don't know
I'm
if
gonna shoot.
but we pretty much do everything online though.
Hmm.
So probably, I honestly, I rarely go into the credit union unless I need something like serious and fast.
Mm.
But I usually do everything online.
Yeah. Yeah, same here. That's the way of the future right now, isn't it?
Mhm.
What's the requirements again to bank with Navy Fed?
So you have to be military, DoD, government employee, or family members of those groups, immediate family members. And
Immediate.
the one that a lot of people don't really think about when they're thinking family members is military members. So a lot of people think like, oh, the military member has to join Navy Federal and then I can join. But if you have a family member that was ever in the military, even if they don't have us, you can join. So like if your brother, for example, was in the Navy and he's like, I don't like Navy Federal. I don't want to use them. You can still have Navy Federal just because he was in the Navy.
What about a parent? Does that work?
Yep, any immediate family members. So it even goes
Gotcha.
as far as like adopted children.
Yeah, similar to USA's policy, is kind of along those same lines. So because that's I never served, but that's how I'm able to have access to USAA. But that's interesting. I didn't know I could have Navy Fed too.
Yeah, a lot of people don't. It's really sad because there's a lot of like really cool products. Like we have this certificate that's out right now, and it's a year long. I can't remember the exact rate, so don't quote me on it, but I want to say it was like over 4% in dividends. And it was like you could put up to 3,000 in there and you can keep depositing as much as you want. And so it's like if you put $3,000 and you even got 4%, let me see what the math on that would be. You'd have like another $120 at the end of the year at the least in that account if you didn't keep redepositing the dividends in there. But if you just keep redepositing, then you actually have more.
Are dividends taxed? Is that earned
Mhm.
income? It's
They
earned
are,
income.
yeah, so you
Yep.
report it.
Is it tax? Is it considered capital gains the same way that would be in the stock market?
I don't, I don't know for sure. I don't think so.
Mm.
Um, and I know that I want to say it's like $10 if you get like $10 or less, because I'm not like a tax professional or anything.
Hmm.
But I think it's if you make $10 or less per year, then you don't have to report it. Um, but I don't know that it gets taxed the same as capital gains because capital gains is kind of crazy.
Yeah.
Mhm.
Yep. Agreed.
Mm.
Yeah.
I don't like it.
Yeah, I don't remember like ever paying that much on my dividends for taxes.
Well,
Man,
that's good.
so
That's good to know.
I had another question just popped up. So when I'm going to apply for different like loans, right? Different loan, are there multiple loans I can apply for, like an FHA combined with like a VA or say or something like that? Can you combine loans or packages or products for home
That's a,
purchasing?
so you can't combine them, but you can apply for one product and then say, "Hey, I want to like, see all my options." And then they can switch you to a different product usually in the pre-approval stage, even after you go under contract, but then you'd have to let the seller know that you want to switch your product. But yeah, they can show you your whole lineup of options, and then you can choose before you go under contract for a home which one fits best with whatever purchase you end up going with. So
Mm, okay.
you can't combine different products, but you can apply for whatever products that company has when you get a pre-approval letter.
Okay. And the determining factor, pretty much is the credit score, your FICO score, or your mortgage score, right? That determines what product will best outfit you for the home loan you could apply for, basically, more or less.
So
Or,
there's a couple different things that we look at for what product
Mhm.
fits you best. Nowadays there's so many different products for your occupation. So there's even like first responder products sometimes, there's first time homebuyer products. So we'll look at like your career and what type of home you're purchasing. And then your credit score is one of them too. But the biggest determining factor I'd say is your down payment.
Mm, the
However,
money, the cash.
yeah, yeah. However much money you have to put down, that's usually what will be like the final determining factor of like, okay, this is probably your best bet for getting the best deal.
If
Mm,
you're a first time home buyer, you can get creative with that. For example, if you've been working with somebody a long time, you can take a loan against your 401k. I'm by the way, not a financial advisor, so I can't like give advice that you have to follow by any means. But the difference between using that is as you pay, you can choose to pay that back through your paycheck of the company that you work for, and you're paying your own interest back to yourself versus paying it back to a bank or another loan, right? So there are, just my point in bringing this up, you can get creative with down payments if that's the route you're going to take. If you don't necessarily have 40,000 in the bank or whatever for your down payment, there are other ways to go. If you have, is a Roth the same way too? Roth and a 401k?
Dude, you're hired. Jake is our new loan officer, basically, because he knows all the cool tricks. Yeah, you can borrow against your 401k, and then the loan, it doesn't, so whatever your 401k is in Roth or traditional, you can usually borrow against it and it doesn't count against your debt to income ratio. So you can't take out a regular loan to do it because then it will affect your budget for buying a home. But the 401k is usually the best place to pull from if you have one.
Yeah, I may or may
Interesting.
not have used that with mine. Now, is it only first time home buyer that can do that, or can you do it? I know it has to be your primary residence, but can you only do it when you're buying your first home?
It depends on your 401k, like whatever company it's with. So whatever they say, is whatever we're cool with. Mhm.
Mm, interesting.
Wink, wink.
Right. Jeez.
Yeah. So
Okay.
sometimes people think they don't have money to buy a home, but they have it sitting right there in their 401k.
Mm.
Right. And then I was potentially using this to avoid having to pay the what do you call it? The mortgage interest payment. Was it, what did you say? What was it? PMI? Is that what it's called? Yeah.
Mhm.
So I may or may not have used that to avoid, because the bank that I ended up getting lending from was going to have that. And so I tried to get creative there.
Yeah, that's a really good option.
Okay, okay. Learn a little pro tip right there, a little right? A little pro tip. So,
Yeah, and just to recap, the benefit there, notice, is just you're paying
yeah,
your self interest back to your
right,
401k
right.
instead of paying the mortgage payment, which is or the more, what is it stand for, PMI?
Private
Was that,
mortgage insurance.
yeah, private mortgage insurance, which you don't get back, right? You don't get that back.
Yeah, exactly.
So I was like, I'll just pay interest to myself through my 401k as I pay it back, so that my 401k is just going to build more rather than lose that money. So that was the logic behind choosing that avenue.
Mhm.
That's what's up. Go ahead and rewind that a couple times, folks, to get that pro tip right there. And so Reese, where do you work outside of? Are you just limited to Arizona of who you can help with different products that you're doing offering?
No, we actually land in all 50 states.
What you can you
Mhm.
say that one more time?
Yeah, yeah, we land in all 50 states. So I can do a loan anywhere. My team tries to promote in Arizona. So a
Hmm.
lot of the work that we do is to try to help Arizonians. What's the
Hmm.
word? I'm
Yeah, I
from
think that
Washington.
works. That
Yeah,
works.
that
Yep,
works.
you're good.
Checks out. Um, that's where we do a lot of our work, but we do loans in Washington, Texas all the time. I think Florida is another one that our team does on a regular basis, in California. Yeah.
Sweet.
We both
So
lived
let's.
in Arizona before.
Oh
Both me
yeah,
and
Jake, you
Notice.
lived there too. Yeah, Jake. I forgot Jake
Yeah.
lived. We all lived in Arizona except for Tech.
Hmm.
I think Tech just came down to visit. But yeah, that's crazy. So let's say our listeners listen to this podcast, and they want to reach out for you or to you to help them get a loan for a home. What would the process be like for them to establish that?
So I'm in the process of scheduling or sorry, putting a link to my book now on my Instagram. So at
Nice.
Reese underscore with Reese. Soon there's going to be a calendar link where you can just click and then schedule a meeting with me, and then I'll go over everything with you. Or you can just call or text me at 682-220-7309.
Perfect.
Mhm.
Awesome. Right there, direct number, folks. And then again for like, man, I probably don't want to beat a dead horse, but typically when you're a freelancer and you want to apply that income to apply for a home, you want to more or less show that you've been doing it for at least 3 years,
At least 2 years.
at least
Um,
two,
it's 2 full tax years.
two full
So
tax years. Hmm.
for example, if you're applying like after you file your taxes for 2022,
Hmm.
you want to have been doing that for all of 2022 and then all of 2021. So
Got it.
if you like started your business in 2021 and you only had like 6 months worth,
Hmm.
or you didn't do too hot that year, we might not be able to use it because then it doesn't really look regular for 2 years. So you just want to make sure like it's a steady source of income that's either increasing or stays the same.
Copy that. And then work history. That's important as well, right? How long of a typical work history do you want to show the banks or loan officers?
So typically you want at least 2 years of work history in ideally the same position. It's easiest when you have it in the same position, but that's not the only way that we can lend. So sometimes there's cases where you have somebody that has a great job, they're just about to start it, so only have a job offer letter, and they're just waiting on their start date. But they've been going to school for the past 2 years, like nurses. Nurses are a great example of people that have like really solid jobs right out the gate when they graduate. We can sometimes use school as your work history. So people that are just starting new careers, they can even use like a job offer letter to, as long as they're getting paid on W-2s and they have like a regular salary or base hourly income, then we can use a job offer letter to loan for them.
Nice. That is another pro tip I ain't ever heard. You heard that here first, folks. You know what I'm saying? We are the encouragers, and you heard that right here. What's up, Coach? How you doing? Can you hear us okay?
I made it, fellas.
Oh, what's up, Coach? Go ahead and introduce yourself to our guest, Coach.
Hey, what's up, man? I'm sorry I hopped on here late. How come I look fuzzy? Like, do I look fuzzy?
I don't it could be your the camera could be like a little smudge on it or something. Maybe wipe it.
I think Zoom is see how Reese is blurred. I think your blur option is trying to blur you too.
Yeah,
at the same time. It's the Zoom
How
feature.
dare them try to hold up, man? People,
if you have a little bit of light, a little bit more light on you, I think it'll separate you from the background.
I got you.
Yeah.
Yeah, but you're fine. We can see you. We can hear you. You sound great.
Thank you. Man,
Yeah,
I'm
man.
sorry I hopped in here late, fellas.
Oh, you're good, Coach.
Miss.
All good.
All good.
Hey, they call me Coach. And been friends with these guys. These guys were my roommates back in college. And we just been friends ever since and trying to connect and just trying to find ways to encourage our poly peoples. Just trying to get on a different level. You know, mom and dad came from the islands. And I think it's our purpose, our job to kind of take that next step in life and try to encourage our next generation after us. So I'm excited to be here. Thank you.
Yeah, yeah. I heard all you guys played football together, and I have to like ask what years you guys were, because all my brothers played football.
I was about to say, do you have a brother?
I have three. Yeah, I have three older brothers, and then we have one that like kind of adopted too.
Texas, El Paso.
Laufasa.
Yeah.
Oh,
Mhm.
did your brother play in the NFL too? I think he played?
Yes. Yeah, for the
I can't remember.
Bengals.
Was it Cincinnati Bengals? What's his name?
Darren.
Darren. Oh, okay, yeah, Darren. Yeah, okay. That's your brother?
Yeah, that's
Okay.
we're like twins. He's only a year apart from me. So like when we grew up, everybody thought we were twins because we were always together. Yeah, I
Nice.
actually went to go when I got out of the army, I went to go live with him for his last semester of college just
Mm.
so I could watch his last season.
Oh, nice. That's what's up.
In
Very cool.
UTEP, right?
Yeah.
Right next to the border.
Yeah. And then a couple of my brothers, they played for Wazoo. So I think you said you guys were at ASU or something, right? So I was like,
Yeah,
man, they
Coach played at ASU. Yeah.
yeah. And one of my brothers he played at UW. So I was like, they probably played against each other.
Oh yeah. Oh
Yeah,
yeah.
most
Those
likely.
schools were they were pretty good. It was fun to go there and play in their stadium. You know, it would have been even better if we would have beat them.
Well, We have a missing member of the podcast, Paul. He probably played against your brother in the NFL. But yeah, Paul, we
Yeah,
don't
most
have him on
likely.
tonight. But yeah, he played in he played with coach at ASU and then went to the league afterwards.
Oh, cool, cool, cool.
Man, yeah. Small world. I remember watching your brother. Did he play fullback or like a running back, right?
Yeah, yes.
Yeah, I remember that. Yeah, he was strong, bro. Yeah, he was a strong kid. He
Hmm.
just be running people over. Man, I think it was like, yeah, that's what's up. Gotta tell him you said hi.
Yeah,
Yeah,
yeah.
the Polynesian community is, it's a tight-knit group, especially
Hmm.
in football. In football, man, it just connects all of us and music, right? But
Yeah.
and then you're Samoan descent.
Hmm.
What
Yep.
does it mean? Yeah, like thank you again for coming on. But yeah, our one of our biggest things here is just encouraging and providing information to our Pacific Island community, oceanic people, diaspora. So it's great to see someone like yourself that someone else can identify with. It's important to see people in those spaces in our culture and our community. So it's been a treat to have you on and sharing your knowledge and information and your journey because there's a lot of things that you've gone through to be able to be at this point in your career and your life to be able to share with us. So thank you for that. Coach, did you have any questions to Reese over here about anything at all?
Man, I'm sorry, Reese. I usually try to catch the drift of the podcast and try to just, you know, add on. I really um, don't really have anything too much to add. I wish can we restart this again? So I can figure out what you guys were talking about because I missed everything and I rushed home so I can try to catch on. So I apologize,
Well,
Reese.
let me jump in. Yeah, let me jump in, Coach. I'll ask one. So now that we kind of connected it to the Polynesian side of things, are there many in the mortgage side of things? Are there many Polynesians that you work with, or that you kind of have a connection with, a social circle with, or is it mostly are you kind of on an island out there by yourself?
Oh my gosh, I love that you asked that. And we're talking about buying homes, coach. So if you have any questions about buying home, let me know. Um, there's like no Polynesians in this industry. Like there's barely any of us. There's like a very few that I've met that aren't and lately on social media, I feel like I've had a lot of people follow me from like Hawaii. And so of course, like over there, they probably have a lot. But in Arizona and when I was a lender in Texas, I actually met no people in Texas. And then the only other person I met here, she's actually a realtor in Washington. So I haven't met like any islanders really that are in the industry. And there's this huge thing in the real estate industry. It's called it's like a Hispanic dang, I'm blanking on the name, but it's like a
Mm-hmm.
Hispanic group for realtors and lenders. And I'm like, where's our group? We don't have no, we don't have no group. But one of these days, I love that you guys do this. As soon as you told me what the podcast was about, I was like, I'm gonna go listen to a bunch of episodes, and I love it. It's amazing what you guys do, because I've always wanted to create this group, and I'm like, I know there would only be like a handful of us, but I know that they're out there. I just haven't ran into them like in person. And so, yeah, to answer your question, no, it is like an island out here by myself.
Well, you can
What
So,
are
just
you?
get started.
You're in Arizona. You're in the Phoenix area of Arizona.
Yeah, I'm in the Phoenix area.
You can start it. You can jump it off. Reese, you can go jump that off right
Yeah,
now.
we'll
For
promote it.
real.
Let us know. We'll promote it right away for you. We'll blast it out to social media. Just let us know what you need from us.
Man, I'm gonna do it. One of these days,
Go
I'm
for
gonna
it.
start a Polynesian Realtor Association group because they have one for the one for Hispanics. It's huge. Like there's people that aren't even Hispanic that join it because they're like, oh, this is cool. And they have like veterans ones. They have all types of groups for realtors, but no poly groups.
Man, you can start it. Go shoot. Start 2023, new goals. There you go. Start it off, man. Jump it off. You never know. Um,
Right.
I'm connected with a group of people here in Utah where I live, and they are in the real estate space. I don't know what field they're in, but they're in like they're purchasing Airbnbs, like just like short-term rentals and some few long-term rentals. But there's a few out here and they're young and they're energetic. And we meet like every quarter to kind of just talk about this space and just try to figure out what everybody knows and connects. But I would love to connect you with a lot of the polys out here, just so we can continue to build this group.
Yes. Yeah. I would love to do that because I don't talk about it a lot because I'll start crying and then I just sound super corny. So I'm like, I really don't talk about it all the time. But part of the reason why I like love this job is because my parents, they came here from American Samoa and they didn't know like anything about buying a home.
mm,
Nobody taught them anything. And they were renting forever. Like, man, they bought their first home when I was little, and then we ended up having to sell it, which if they had known that they could just rent it, then they might have kept it, but they sold it and now some guy like doubled the price and just took advantage of them. And they didn't buy again for I don't even know how long. It was at least like 16 years, I think. And they wasted so much money on rent. And then they finally bought again like a few years ago after I was like, you guys should buy. Now's a good time to buy. And they ended up getting a great interest rate. And then I was like, you guys should refi. Now's a good time to refi. And they ended up getting an even better interest rate because their daughter was like in the industry and they are like so proud of their home purchase. And so half the people I talk to, I just kind of like pretend that it's my parents because I'm such a daddy's girl and I love my mom. She's like my best friend. So that's why I care about people so much because I'm like, man, like nobody taught them anything when they were living over there. And um, a lot of people that I know that like own properties over there or land, they're like, oh yeah, they lend just like if they know you. And I'm like, what? Like that's not how it works over here. When people move over here, then they don't know anything about the way that mortgages work or like how to buy a home. So I would love to like bring that to the community
That'd be
because
dope.
needs it.
That's a powerful story. That's a powerful story that's across many different lines in our culture, right? A lot of people
Mhm.
come here in the hopes that they can seek a better life for their kids. All I know my parents came over here for that. But yeah, that's such a powerful thing. And now that you know that information, you can share that. You can share all that knowledge and disperse that amongst our community. That's powerful.
Hey, if you
Co-
can guess, if you can
Coach, that
guess,
was perfect timing. That was perfect timing coming in. And now we can connect her with your group that you have there. It was like meant to
For
be.
real. There you go.
yes.
Catapult
Hey,
it off
Reese, I
right
got a
there.
quick question for you. If you can guess like a statistic, right, and make it up right here on the spot, how many Polynesian families do you think, in your opinion, own a home?
Whew. My uneducated guess would be, I want to say it has to be like 5 to 10% or something crazy.
And that's not a lot, right? So that's why you are critical to this world. You're critical to our poly people, to our poly community, and you're passionate about it because I could hear it in your voice when you talk about mom and dad and their struggles, and they're not the only ones, you know. And so I hope if you're listening to this podcast, you guys got to tap in with Reese, and try to figure out how to get educated, how to get a home, and how to get a loan, and get your credit score up, and all those good things, and being able to purchase a home.
Yeah,
Mhm.
especially right now. Do you ever get asked the question, when's a good time to get into a home? When's a good time to buy? What is your perspective on that?
Yes. We get asked that question a lot, and my answer is always the same. It's really just when you're ready to buy, because the market kind of evens out with when interest rates are higher or when they're lower, and then how much money that you're going to need to bring to the closing table. So let me just give you an example. During COVID, the interest rates were like crazy low, the lowest the US has ever seen. People were getting like 2-3% interest rates. Because the rates are so low, so many buyers were qualified to buy a home that wouldn't otherwise have been qualified before. So when there's more qualified buyers, there's more people looking for homes. So with the higher demand, homes are getting bought up so quick because there's so many people looking. Sellers know, like, I can sell this house to anybody because there's so many people that want to buy a home right now. And there's so many qualified people to buy a home. So when the interest rates were at their lowest, sometimes people were having to pay over the asking price and even over the appraised value of how much the home was worth, because there was so much competition. They would have to go into bidding wars, like, I'll pay more than that guy, I'll pay more than that guy. So people were getting super low interest rates, but the amount of money they had to come out of pocket with was just ridiculous. I had somebody, this is an actual deal that closed. He paid $50,000 over the appraisal value. And I was like, dude, your home's not worth that much. We just told you on a piece of paper, it's not worth that much. Now, granted, like, he was planning on keeping it for a long time. So he's thinking like, eventually it'll be worth that much and I have a great interest rate. It was probably still a good deal if he holds on to it for a long time, but it's just crazy, like how much money you have to come out of pocket when the rates are low. And then it's the exact opposite when rates are higher. So now rates are kind of like at their highest that they've been in history. And so there's less people that can even afford to buy a home because we just can't qualify them with the monthly payments. They're too high for some people's income. And so there's less buyers. Now there's more inventory. So there's more houses they can choose from. They can take their time with buying. They can look at all the houses that they want. And they might even be the only person making an offer on the one that they want. So the seller's like, I really need to sell. Like, I need to get rid of my house. And so they'll give them money to close, and they'll actually pay for like all of their closing costs. Me personally, I bought my house when the rates were starting to go up. I bought after Jake. So my rate is probably like higher than his. And there was just less competition. And the closing costs for my house were $8,000, but the seller paid $20,000 for my closing costs, which means that I had $12,000 that I could use to either buy down my interest rate to get a lower interest rate, or since it was a VA loan, I threw it at debt. So I just paid some debt that I had. And that's like the crazy kind of deals that you can get when the interest rates are higher. So there's deals in every market. The interest rate's not the only thing that's important. Whenever you're ready to buy, like whenever you think you have your down payment, your closing costs, and you're like, I'm stable, I'm good, then just start looking and ask your realtor, ask your lender, what is the best way that I can get the best deal in this market? And they'll tell you. And you can ask them to compare it to other markets too, but you're going to see like that it kind of evens out. Like if you're going to get a lower interest rate, you need more money. If you are going in a market that has higher interest rates, you need less money. So it just depends on what kind of deal you're looking for, but there's crazy deals you can get in any market. So I don't ever really tell anyone to wait or to buy now.
So interest rates kind of, it's like a myth, especially if you're a first time home buyer, right? Because typically your price point is not as affected by the interest rates as somebody that's, let's say somebody's in the price range of 700,000 or crazy, right? But now with the interest rates, they can only afford with their income a $500,000 house, right? So they may be affected more than somebody that's entry, going in their first time and they're trying to buy within, 150 to the 300 space. So would that be something you would agree with there?
Exactly. Yep, exactly that. So some people, they just don't even want to cut their budget. And then some people, they get priced out, like they can no longer afford a home that's like a reasonable price in the area with their income. So that's why there's less buyers right now.
Mm. You mentioned something that I caught, like it caught my ear. So if you bring more money to the table, like you have a large, you know, deposit or down payment, w- can that bypass the whole or can that help you or hurt you in the home buying process for the mortgage or the loan side?
It definitely helps. It always helps. The higher your down payment is, the lower that your payment is. And then usually the lower your rate is. So if you're putting 20% or more down, typically you're getting the lowest rate and the lowest payment with that amount. Anything less, it's going to kind of creep up with each 5% or so that you don't put down. So, like if you decide that you want to put 15% down instead of 20, you're going to get a little bit of a higher rate. Your payment's going to be a little bit higher. When you're talking the difference between putting like 5% down versus putting 8% down, a a difference that small, it might be a huge dollar amount. Like depending on what purchase price you're putting down, it might be like you have to bring an extra $20,000 or something to the table. But over the long term, your monthly payment might only change like a few dollars. So it usually has to be like at least 5%, at least 10% in the difference for you to see like the rate and the monthly payment change a lot.
So I understand now. I think I understand. I understand the process even way more now that you've been able to talk to you, man. That's dope. Thank you, Reese. Thank you,
Yeah,
thank
so
you, thank you.
important. So important having you on to break it down in like ways that it's just easier to understand, right? Because it can be very complicated. The way a lot of it is presented to us is complicated. So love having you break it down. So it seems much easier and simple of a process when you explain it the way that you do.
100%.
Yeah.
Is there anything that you wanted to talk about or touch on or um, bring up a topic, anything that we might have missed, not asking you, or something that you critically that you wanted to share with our listeners this podcast?
Man, you guys had so many great questions. I feel like you hit like all of the super major points that people should know. The only other thing that I think gets missed a lot with buyers, especially with like social media being out there, is every market is so different. And so when you are like watching the news, if you're watching a social media video, just kind of think of it as that person is either talking about a specific market or they're talking about everybody. Like they're talking about the whole nation. So when we say that like markets are slowing down, values are decreasing, I could be talking about Phoenix, but there's
Mm.
other markets. Like I've heard Nashville is one of them, but I don't do a lot of business in Nashville. Their values I've heard are still going up. And there are some cities where like their markets have not slowed down at all. Like despite the interest rates, people are still snatching them homes up. They want to buy there. And so I think that's the only other important thing is just to know that like every specific local market is different and that you really have to do the research on your own market instead of doing like a large scale nationwide search when you're looking for information.
Mm. Super pro tip right there, y'all.
Yeah.
Sheesh. Thank you for that.
I got to go to school to learn that. You just gave me some free sense. Thank you, sis.
Thank you,
Yeah,
thank you.
I got you.
Malo, malo. Jeez. Okay. Well, man, this being the first podcast of the year for the Encouragers podcast, man, this has been a great thing. I think we're trying to like not only encourage other people, like to pursue their dreams and everything like this, but also be financially literate. Understand mortgages and how to apply for loans, but I think we're trying to go down a little bit more down that financial literacy route, and having a person like you to come on here and break that down I think that's a great message to get into for the new year, right? To something that we can play over and over. And I have nothing else to ask you. I think everything that I had questions, I hit it. And then, gentlemen, Coach Jake, do you have any other questions you might have for Reese here while we have her?
No other questions, but no, like you said, notice no better way to start the new year with, some game on home buying and
Straight
the
up.
loan process and breaking that all down. We couldn't have had a better guest on. It was great content. I'm so glad we started with you, Reese.
Thank you for having me. I love what you guys are doing. I might have missed the episode if you guys already made one because I only got to listen to some of them. But I want to see a podcast on like how you guys created your podcast and like how your entire process goes. I'm so curious on that, and I would love to see that like sometime in the future. If
Yeah,
you have,
definitely. Yeah, yeah, yeah. We actually started on our phones, our iPhones. I don't know if you can see, but we started on FaceTime. That's why that's how we started a podcast. I would record it because I had a video camera, right? I would record the podcast on our from the video camera and screen record it to the Apple screen record thing. It was so ghetto, man. It's still we started seeing people using Zoom and stuff, so we kind of transitioned over to Zoom to try to use it, and we've been here ever since. But we're still not perfect, man. Like our audio is still all messed up. Some of our images are messed, but we just um from our phones. That's how we started, and we use Anchor. I'm gonna plug shout out to Anchor. It's a free platform you can use. This should probably be an ad part for the podcast. Anchor is a free Anchor. It's called Anchor, Anchor FM, and they own Spotify, or Spotify I think owns them. But it's a free app anyone can use. You can put ads on there. You can put music and all this other stuff. But and upload video content to Spotify, kind of like all of the other major podcasts that are going on. But Anchor.com or Anchor FM, I think is the app. But yeah, shout out to Anchor for letting us use this platform. And yeah, but we'll definitely do that. We'll definitely try to do a podcast about that, how we started.
Or you could listen to all of our episodes because it kind of is sprinkled in like episode here, a little bit there, a little bit there. So the more you listen to some of our older stuff, you'll actually kind of hear, but it might be good for us to kind of consolidate it into, a single episode and kind of go, but you'll see we address it here or there. So as you listen to more of our content, you'll kind of piece together the story a little bit more than you know now.
yeah, I'm gonna have to go binge them now.
Yeah, it's a lot of mumbling and rambling, so don't mind that. You'll have a good time.
A
But
lot of laughs.
like one of our goals is to get more guys on our podcast. Like it's hard to get men and like dudes to come up on here and talk with us. Like every every person we've ever asked for knowledge and stuff, all the females, they always say yes, like right away. But then like takes 2 or 3 weeks for a dude to come on and share it. Like I don't know what it is about our podcast, but we're equal opportunity podcast. We like to talk to women and men. We need more men for this 2023 year. We want to have a lot more of my brothers come on here and talk and spit game and have a cloth talk with us. So if you're listening out there, please come and join the podcast, man. We want to share with everyone.
I'm gonna have to tell my brother to hop on. Well, I call him my brother, but he's one of my first cousins. His name's Aladdin. He
Ooh.
just recently transitioned out of becoming or he played for USA Rugby, and then he played for the professional rugby league. He was on the Seattle team, and
Mm.
he recently transitioned out. So I don't know if you guys would be doing like athlete ones in the future, but I
Oh
think
yeah.
super cool athlete podcasts would be like the transition, which like you guys would have such a great perspective on it if you haven't done an episode on it, is like the transition from like when you stop playing sports to becoming a professional. Cause now he's a firefighter. And I'm like, dude, I haven't even had a chance to talk to him about how crazy that is. But it's like, I just know the transition from becoming a professional athlete to just a person that is like a working professional is crazy. And like a lot of athletes are go through like a bunch of crazy mental stuff, which I don't
Mhm.
even know if he's gone through, but I would love to hear from a male perspective on it.
That's
Oh,
Coach's wheelhouse. That Coach Will wrote a thesis on that,
I
one of his
did.
thesis. Yep. It's
Yes,
huge.
it's called identity crisis or identity theft, right? You're just trying to figure out who you are after an athlete, and it sucks. You know,
Yeah.
it's detrimental to the mind and detrimental to your life of transitioning from being a superstar to just being a regular person in the community, and it sucks bad, you know, and it's depressing and all that cool stuff that. But yeah, we would love to consider talking about that. I think mental illness is an issue, is a problem within our poly community, within our whole family environment. And I think it's something that we need to continue to address and help our poly people, man, come out of that depression state of being just, sad and not being able to get over it.
Yeah. I know he's a huge advocate on like mental health in general. So that'd be cool.
Yeah, definitely. We'd love to have him on. Yeah, please share with them.
Yeah, I will.
All right, guys. Well, I don't have anything else. Reese, you have anything else you want to touch on?
No, no. I think you guys hit everything.
Perfect. Well, thank you again for coming on. And this has been first episode of the 2023, and hopefully more to come. Thank you guys for being here and for tuning in. It's Encourager Podcast. Be sure to subscribe to our YouTube channel. We're trying to grow that channel. And please like and follow us on all our social medias. We're on a TikTok too. We don't dance, but we have some TikTok videos. So again, thank you guys for tuning in, and you guys have a good night.